The World Bank Group has approved the disbursement of 138.6 billion Kenya shillings as part of its development policy operations in Kenya. This is the fifth installment of financial support provided by the World Bank over the past 5 years. Additionally, the International Monetary Fund staff has reached an agreement to provide Nairobi with 56.8 billion Kenya shillings as part of a larger 487.9 billion Kenya shillings multi-year program. The IMF program has been extended by 10 months to April 2025 and now includes a 20-month-long resilience and sustainability facility arrangement. To secure the World Bank facility, the Kenyan Treasury has taken certain actions. The Energy and Petroleum Regulatory Authority has issued new electricity tariffs covering the next 3 years to ensure sufficient revenues for Kenya Power, the national electricity distributor. This move is aimed to covering the cost of purchasing power and expanding investments. Kenya Power has been undergoing reforms alongside other state-owned enterprises and has been involved in structural changes aligned with the IMF program. In December, the IMF outlined additional reforms for the national electricity distributor, including optimizing organizational structure, staffing levels, procurement, and stock management to enhance efficiency and reduce waste. Furthermore, the government halted electricity subsidies at the end of December, as they had created a revenue gap of 26.5 billion Kenya shillings for the utility. This subsidy has resulted in a 15% reduction in electricity prices but contributed to Kenya Power issuing a profit warning. The World Bank has been urging the government to enhance revenue generation by expanding the tax base. Efforts have been made to tax the informal sector, and new regulations have been introduced to guide the imposition of excise duty, financial derivative contracts, and value-added tax on digital imported services. The Finance Bill 2023 proposes a revision of the turnover tax threshold, while the national tax policy aims to increase the presence of the Kenyan Revenue Authority in major towns and cities. In a significant move, the Treasury has shifted Kenya from a debt ceiling to a debt anchor to allow the government to fund the budget deficit in the next fiscal cycle. Amendments to the Public Finance Management Act has been submitted to establish a public debt anchor at 55% of GDP in present value terms, replacing the previous debt ceiling of 10 trillion Kenya shillings. This change is necessary as the current debt ceiling is projected to be exceeded before June 2024. The government's privatization plans, including the proposed privatization of 5 state corporations, have been listed as an action plan to secure financing from the World Bank. Amendments to the Privatization Act have been submitted to streamline the privatization process. To be considered for new financing under the IMF's Resilience and Sustainability Facility, Kenya is required to integrate climate-related consideration into budget preparation and public investment frameworks. These include managing climate risks, enhancing early warning systems, and prioritizing climate-related investments. Overall, these recent developments highlights Kenya's efforts to secure financial support from international organizations, implement economic reforms, expand the tax base, and address climate-related issues in its budgets and investment planning. What are your thoughts? Drop a comment. Thank you for watching. Like and subscribe. See you in the next one.